Hi, everyone, and welcome very much to the Sygnum May House View. Thank you very much for joining us. The theme for today is how the market stands with the Ethereum ETF decision nearing. I'm joined, as always, by Kat Tischhauser, a head of investment research, for another session. Hi, Kat. How are you?
I am very well. Good afternoon to everyone.
So, as usual, all the content and opinions presented in this live stream are not investment advice. So let's get going. The countdown is on as we approach the upcoming decision for the first US spot Ethereum ETF, as we all know. Less than 48 hours remaining for VanEck, followed by ARK on the 24th. The outcome of these decisions could potentially have a significant impact on the crypto market. Until quite recently, there had been mixed or negative speculations, but really, what a difference a day makes, Kat. So the last 24 hours have been very exciting.
Indeed, you froze, but I assume you finished the question. Yeah. So really, as you say, a lot has changed in the last 24 hours. Everybody's been expecting a rejection just based on very little engagement from the SEC, not mirroring at all what happened prior to the Bitcoin ETF approvals. The prediction markets traded at 10% likelihood, and analysts basically had just a very low probability as their expectation. And suddenly the SEC asked the issuers who filed for Ethereum ETF launches to amend their filings with a very tight deadline, giving the deadline of 10 a.m. this morning. So with analysts at these firms or staff at these firms posting on Twitter that I won't be sleeping tonight, this will be an all-nighter. So came very suddenly, very accelerated timeline, and very much a surprise. So as a result, analysts upgraded their forecasts from unlikely to likely. The price of Ether, I think everybody must have seen that traded up. Last time I looked, short time ago, it was up 23% in 24 hours. The prediction markets traded up again. The last time I looked, it may be higher to 55% likelihood. So basically, the market is now expecting an approval on Thursday. And does it mean what happened in the last 24 hours? Does it mean that the ETFs will definitely be approved? Obviously not. But it is likely because it doesn't make sense to ask people to deliver documents with such tight deadlines so suddenly. And there have been other political changes in the US, or signals that there has been maybe a turn in the US political regulatory landscape in terms of their approach to crypto for the positive. So that there were two or three other news items in the last 1 to 3 days that all pointed in the same direction. So it is entirely possible that there is really a 180-degree change at the SEC and at the US regulators, and really it's all go. So it's possible, but it's not certain. There were a couple of signs in the last week or two that were pointing in this direction. For example, that ARK removed the staking from their filing, which they actually added the staking a few months ago. Now they suddenly removed it. Grayscale withdrew their futures Ethereum ETF application, and both of these appeared to people who were tracking this that they would not have done this unless there are conversations. Neither made sense without conversations going on in the background. So there were some signs that things were going maybe in this direction. Now there was a massive signal. But there's a couple of buts. One is that there are two forms. The US is always quite complicated when it comes to anything, and the filings are the ones, one of the forms that will have to be approved. They have the deadlines that everybody's been tracking, but there is a second form that also have to be deemed effective products to start trading. And in the case of Bitcoin, these two went live simultaneously. But it is theoretically possible that the form with the deadlines will be approved, but the other form, it won't become effective until a later date, and there is no deadline on that. So there can be, this would be a kind of in-between scenario. They're approved, but they're not trading yet. They can also be approved the same way as the Bitcoin, they just go live, or, I mean, hypothetically, they can still be rejected. And what is a little bit confusing is that the SEC actually, this was also disclosed just a couple of weeks ago, that they actually asked, when they asked for comments on the Ethereum ETFs, they specifically asked, are these Ethereum ETFs properly filed as commodity ETFs, implying that maybe they should be security ETFs, because Ether is maybe a security according to the SEC. And that happened a very short time ago. And again, there might have been a very sudden, genuine 180 degrees that we saw in the last couple of days, but there is uncertainty. And also the same day that this news, i.e. yesterday/today, that these Ethereum ETF news came out, a new exchange that intends to launch, a broker-dealer/custodian called Prometheum, that was established last year by people previously more or less unknown in the crypto market. They came out of nowhere. They today soft launched their Ether custody service, and they classify Ether as a security, and they operate under the SEC supervision. So it was a very strange launch when they came out, because they applied, they got an SEC license, and they said they will operate as a securities exchange for crypto assets. And this was in the midst of course, these lawsuits of the SEC against Coinbase and so on, where the main issue is that a lot of crypto assets, including Ether and a long list of them, should be securities according to the SEC. Therefore, these companies operating an unregistered exchange. So these guys suddenly appeared, and they said, no, it's so easy to comply with the existing regulations. Crypto doesn't need anything beyond that. It all works. And they were immediately asked, even though they haven't launched, they just appeared on the scene, asked to testify at Congress about whether the existing regulation is appropriate for crypto. And they said it absolutely is. So this company is very strange, and slightly suspect where they come from. And they soft launched this Ether staking service with Ether as a security under SEC supervision yesterday. So that there is confusion and there is uncertainty. However, the approval is the likeliest scenario at this point. And then the question is it not priced in? So if it is approved, is it not priced in? Obviously, if it's either that in-between scenario that they're approved, but they can't yet start trading, or they're rejected, then that would stall or even reverse the rally, depending on also, of course, any reasons given for those developments. However, assuming that they are approved, then the question, of course, will be the same as it was for the Bitcoin ETFs. How will the inflows eventually turn out? Because a lot has now been priced in. From here on, the inflows will have to drive it. And we will, of course, see the same thing with the grayscale as we did with Bitcoin, that there'll be a lot of selling and redemption of the grayscale Ethereum ETF if that is approved.
Yeah, sure. Certainly quite a dynamic situation, and it's thank you for reading the tea leaves there and trying to see where we are. But moving on to Bitcoin, it fell in April. So did Ethereum, but they're both substantially up this year. It seems like the crypto market overall has got some resilience. So, what do you think is kind of supporting that or driving that?
Yes. Thank you for asking that, and thank you for having this chart that we put up on the screen, because I think it's really striking that the crypto market, by extension, and the price of Bitcoin basically has correlated almost perfectly with the net inflows into the new Bitcoin spot ETFs. We can see on the chart that the two almost exactly overlap. There's a lot of, and that of course makes a lot of sense. And there's a lot of talk almost on a daily basis about US economic data releases and what that means for the crypto market. And I think because there are so many US economic data releases, people can talk about, there is something to talk about every day, and news flow on Bitcoin doesn't come with anything like that frequency. So when people kind of comment on a daily basis on the market, they reach to these news, but actually it's quite dubious why US macro developments, especially data releases, frequent data releases, should matter for Bitcoin at all. And what we actually see is that the narratives on the macro developments for Bitcoin go both ways. Some people say if the macro environment is worsening, buy Bitcoin, and some people say if the macro environment is improving, buy Bitcoin, and vice versa. So because people draw different conclusions from the same data based on whether they think that Bitcoin is a risk asset or whether they think that Bitcoin is a safe haven asset, inflation hedge, insurance against macro disaster. Because of that, they pull it in both directions, which I think is the reason why the correlation has actually been historically almost always very low. It's still very low. And at the same time, the correlation, as we can see on this chart, with the ETF net inflows is huge.
Certainly, and the Bitcoin halving, which we've just happened recently, is sometimes known as being a challenging time for miners. So what happened to them?
Well, that's interesting, and this is maybe a point when you ask what's been driving the market. We could also ask what's not been driving the market, and that's definitely been the halving. Even though, despite predictions that it will either lead to a massive sell the new sell-off, or it will ignite a rally, or miners will collapse, or the hash rate will collapse, absolutely none of that happened. And I think basically, if you look at the hash rate, it's 10% or so above it was 1 month prior to the halving. It's obviously up and down all the time. It's currently trending up. The worst thing that happened is a few old machines were switched off that are quite inefficient. But basically, miners did not come under pressure and weren't, shouldn't have been expected to come under pressure, because events that are well flagged and known in advance don't cause shocks and surprises, right? We've known that this halving would happen. We've known it for 15 years. So miners were prepared. And in any case, in terms of the hash rate, the primary driver of the hash rate is the Bitcoin price. So when we see the correlation, Bitcoin is the leading indicator, the hash rate is the lagging indicator, and we see a very close correlation with that. So really, that's been pretty much a non-event, although I would still repeat and emphasize that the halving is very significant for how it's changed Bitcoin's store of value properties relative to other store of value assets, such as precious metals, which you must have seen have also been rallying very strongly recently. And maybe one more point to highlight in terms of what's driving the market, or the fact that the net ETF inflows have been such strong drivers of the market, is the outlook for these inflows, right? Which actually remains very strong. We've always said that various platforms will gradually come online over time in the course of this year, or maybe even into next year. And we are seeing this. For example, Morgan Stanley just said a couple of weeks ago that they're looking to allow their 15,000 brokers to pitch the Bitcoin ETF. So that, which might have happened, this news item was 3-4 weeks ago. So since then, this might have happened. And BlackRock, for example, disclosed that they're in conversations with sovereign wealth funds and pension funds about investing into the Bitcoin ETF, and basically investing into the asset class through that vehicle, and then possibly beyond. We also had and that would be incredibly significant for demand, obviously, if these entities start buying. We also had disclosures on who are the holders of the ETFs at the end of Q1. And it's the ETFs are very, very broadly held. The ETF analyst said that for a new ETF, 20 holders in the first quarter is a lot. And for the BlackRock one, there were 414 holders at the end of Q1, and then obviously for the other ETFs as well. So that's all really encouraging. It's very broad. It's very positive. A lot of it is still to come, and we have seen some pension funds already. Not many, but we have seen some amongst the largest holders. The state of Wisconsin is now one of the largest holders of the new Bitcoin ETFs. The only thing that I would mention as a slight concern for these disclosures of who's holding them is that macro hedge funds hold a fair portion of them. I would say about a third, and Millennium alone, roughly 2 billion worth of the ETFs, and they're obviously not long-term holders. So that's also something to keep in mind.
Yeah. Zooming further out to the perhaps shaky macro situation with higher inflation for longer, perhaps heightened geopolitical risks. Some might say this is negative for Bitcoin. Others believe, as you said, it's a reason to invest. It depends on their thesis. What do you think on this point?
Yeah, the first point is that a macro environment of plentiful, of easy liquidity, that is favorable for all asset classes. So obviously, if it is going in that direction, or if it's not going in that direction, and so on, it does matter in the sense that when people have money to invest, then they can buy things and things go up. So I mean, it's maybe a very simplistic statement, but it's fundamentally very true. Now, in terms of macro developments, the fundamental value of Bitcoin does not depend on US interest rates. It's Bitcoin is not valued with a discounted cash flow model, and it shouldn't be. The Bitcoin's use, and therefore Bitcoin's value, is driven by entirely different factors and other factors, of which, for example, inflation, rising inflation, higher for longer, shaky macro can be one that leads to a greater use of Bitcoin. So for now, I think it's only been occasionally narratives or certain investment flows, which we saw in 2022, that allowed macro to dominate for a period of time. But so far, it's not really been significant. However, if institutions like large pension funds, sovereign wealth funds, and so on become significant holders of crypto, obviously their behavior will also become very significant for how the market behaves. And in their asset allocation portfolio construction, for example, they may decrease or increase the weights based on what they see on the macro front, or they might have risk-based allocations where they cut and increase weights depending on whatever signals they track. And the high volatility of crypto would mark it for reduction in those types of asset allocation and portfolio construction scenarios. And I would also say that for as we looked at new inflows, the new inflows into the ETFs come from literally new demand being created. So new investors, clients of investment advisors, traditional financial institutions, and so on, investing for the first time, which is organic growth. However, the exact timing of when this money is invested can still be driven by what's happening on the global macro front and what's happening with liquidity. But when people say higher for longer, stubborn inflation, although the last print was kind of more encouraging, I guess, and so on, and all these, the U.S. equity market is making all-time highs in the face of all of this, right? Like the interest rate, the market expected 6 rate cuts this year. Now it expects 1 or 2 max, maybe none. and US equities are at all-time highs, right? So how do you explain that? And it's actually, the explanation is that liquidity conditions, despite high interest rates and rates having raised and then staying high, liquidity conditions have been loose for quite a while. In the US, there is the National Financial Conditions Index tracks it, and that's been pointing loose for some time. And now we have seen more recently, of course, that the Fed turning more dovish with slowing the quantitative tightening, the Treasury announcing liquidity support buybacks. And I would also mention that money market funds have all-time high AUMs, had, I think, about $1 trillion of inflows just in the last year. And that's a lot of what they say cash on the sidelines, basically money that can be mobilized to buy assets if people feel that there are attractive return opportunities there. So I would say it's a benign backdrop. However you interpret the macro, it's a benign backdrop for fresh inflows into crypto.
Sure. Well, zooming across to Hong Kong, where trading for the recently approved Bitcoin and Ethereum spot ETFs kicked off, I think, late April, had significant inflows of more than 300 million, surpassing the US spot Bitcoin ETF. So how do we see this in context?
Yeah, it's amazing. It was a great launch, and the predictions in both directions were completely wrong. There were some predictions that said $25 billion of inflows in the first year and so on, which is obviously unrealistic and always was, because that could only happen if mainland China is allowed to invest in these products. And there was no indication that would be the case. It is possible that one day that will become the case, and it will be very significant if that happens. But there was no sign that there is this Stock Connect, ETF Connect program between Hong Kong and mainland China, where they can buy certain securities. But these ETFs are not a part of that. And so obviously without mainland China demand, those extreme bullish forecasts were unreasonable. But at the same time, others predicted that it will be next to nothing. And when the secondary market flows were reported very quickly, because you can see that on the exchange, but the AUMs were reported with some days delay. It wasn't super quick to get the information on that. People basically looked at the secondary market flows, which was $10 million or something on the first day, and they said, you see, it's nothing. And that, of course, was also incorrect, because the secondary market flows, to be honest, don't matter at all. That's just like people turning it over. It doesn't matter. And in fact, if you hope people are buy and hold, so you don't want them to start selling it immediately. And in the US, the secondary flows were very high because people were switching from the grayscale with the high fees into the low fee ones. So the comparison on that, looked very different, but that doesn't actually even matter. It's the assets. And like you say, over 300 million inflows at the start. If you compare the much smaller size of the market and the fact that there wasn't a BlackRock there, this was a very, very successful launch. So it's just not, the market's not big enough for it to create demand shocks for crypto like the US ETFs did and can still in future, until and unless China actually allows it to be part of this ETF Connect program for mainland China. But I would say for now, there are no signs of that happening.
Sure. Just rounding off the conversation with alts. So some say that the altcoin season could kick off soon, certainly with the major alt, Ethereum, doing very well recently. It certainly could be a driver here. What are your thoughts on when this activity might start driving, and what would be behind it?
Yeah, it's crypto market cycles have been really similar, and their phases have followed the same pattern. And the final phase, which we could call the exponential phase of the bull cycle, was always characterized by the altcoins, i.e. the rest of the market outperforming strongly. So everybody's been waiting for this alt season to start and looking for this same pattern to be repeated. And it probably will be to some extent, but I think there are a couple of reasons why this could be either delayed or be more muted than in previous cycles. And one is that the ETF launches are such significant drivers of all these inflows, and they're coming into Bitcoin and maybe now Ether as well, but not into the rest of the market, obviously. And this kind of differential in inflows obviously has an effect. Bitcoin also has a lot of strong drivers recently, which it hasn't had almost since its launch. We talked about this many times before, but all the innovation and all the activity that's going on with Bitcoin and a whole host of drivers. So it's unique that in this cycle, Bitcoin has such strong drivers, so that the rest of the market versus Bitcoin could turn out differently just for that reason. But in addition to that, there are a couple of developments that are holding altcoins or the rest of the market back. And one is that the fundraising method has now kind of drifted from ICOs to basically raising from VCs plus sweat equity and then doing an airdrop. And that also, and to encourage adoption, get the ecosystem going by qualifying for airdrops and so on. And this is an improvement in many ways on the previous, basically selling ICOs to people who didn't know what they were really buying. They didn't have the ability, retail investors to judge and understand. They were prone to being manipulated and so on. Also, the amounts raised were not in line with what the project necessarily needed. So it's in many ways better. But what happens with airdrops is that a lot of the recipients of airdrops are immediately sellers. So there's an instant selling pressure. When you invest in an ICO, you will be a holder for quite a while. You just made an investment. When you receive an airdrop for free, you're a seller. So that's selling pressure, right? And secondly, there are these basically very large unlocks still looming, the vesting schedules for the teams and the VCs who invested early on. And this is being tracked, and people can see for a lot of the very successful projects, for the very good projects that people would love to buy, and they view them very favorably and would like to invest, but then they can see that there is this vesting schedule with a lot of tokens still yet to be unlocked, and that's future selling pressure, which is obviously keeping a lid on the prices of these assets. So because the unlocks are so significant right now, especially for the successful projects, and because airdrops are now so much of a theme and the way these tokens get launched, this is all instant selling pressure until they're worked through over time, and then of course the tokens can kind of perform more in line with the fundamentals of the project. But having said all that, when a narrative gets going, like AI and DeepIn, these tokens can still 5x, 10x in a very short space of time, even in the face of looming huge unlocks and all of that. For example, Render and a couple of examples. So when a narrative really gets going and a sector, niche or subsector really gets going, it will override these limitations.
Sure. Well, as usual, we've covered a ton of ground today. Thank you, everyone, for joining. Thank you, Kat, for all of your thoughts and ideas and insights into here. For a deep dive into this and other important topics on the crypto market, please head over to our website and download the May House View. It's on the Sygnum website, Learn section, Research and Education. Please visit our website for more information. And of course, please join our 30,000 community, strong community on LinkedIn to stay up to date with our launches, our news, and our research. So once again, thanks everyone, and thanks, Kat, and have a great rest of the day.